Please go on mute, please. Fine. So far we discussed about what is the meaning of Oracle Fusion Cloud Financials applications, right? So in the last session we discussed about cloud. Cloud means it's all about getting our application access with the help of Oracle virtual servers. Within the cloud, we have three options for the clients or customers or companies. So SaaS, PaaS, IaaS, and the differences also we discussed. Okay. Now, on what base you can include the cloud within the applications or specific product family where the applications are deployed. If you have Oracle Fusion applications in your own server, call as Oracle Fusion applications only. If you are accessing the Fusion applications with the help of Oracle servers, that you have to include the term called as cloud. That means Oracle Fusion cloud applications. In the same way, you can take financials or SCM, HCM. Everywhere you have to include cloud if you are going to access those applications from Oracle. If you are accessing those applications from your own servers, don't include the term called as cloud. Okay. So these are the points we have to understand. And one more point, you may have these applications, okay, applications you may have in your server as on-premise, or it could be cloud, SaaS or PaaS. The applications point of view, there won't be any difference. The functionality, the features, you can find same. There is no difference. The same applications where you are going to manage, that is a different. Okay, but within the applications, what are the features you find? The features will be same. It could be on-premise or cloud. This is another point which you have to notice. Now in today's session, let's try to understand the basic business processes. Okay, the basic business processes. When we are going to work on the financials applications, what basic business process we have to understand. When we are going to do any transactions within the financials, what is the background of those transactions, where the process can be initiated, how that process can be handled in the financial applications by connecting with another applications, we can go through in the today's session. Fine. Fine. So when you talk about processes, primary processes are two: purchasing and making the payment. We purchase and we pay. Okay. Right. Purchasing and payment. Other process is sales. Okay. Selling to the customer and collecting the payment. Okay, collecting the payment. It's not like we make the payment. We sell and we get the payment from the customer. Okay, here or else you can say we purchase from the supplier and we pay to supplier. Okay. We sell to the customers and we collect the, sorry, I just here. Okay, say when you sell to the customers, we get the payment from the customer. So payment from customers. When you purchase anything from the supplier, we make the payment to supplier. Payment to supplier. These two business processes we have to understand. When we are purchasing from the supplier, we have to make the payment. Okay, what is the typical process is involved in this activity of purchasing and payment? Which departments are going to involve, in which department what activities we have to perform, how the data or how the transactions need to be recorded, how communication takes place across the department in the process called purchasing and making the payment to supplier. In the same way, when you sell to the customer, right from selling to the customer to till we collect the payment from customer, what are the different departments are involved and what purpose the departments are involved, in which department what activities we have to do to handle this sales process and to collecting the payment from customer. Okay, this is what we are going to see in the today's session. Right. First we'll see the purchasing process. Okay, if you purchase, how we can make the payment to supplier, what are the departments are going to involve, we'll talk about. Here you could see there are few departments: inventory department, sales department, receivables department, cash department, and common department. Okay. So these are departments which are involved in the sales process. Selling and making the payment, collecting the payment from customer. The same way here we have few departments which are involved in the purchasing and making the payment process. So inventory department, purchasing department, payables department, cash department, asset department, and the common department. Okay, first let's talk about this purchasing something from supplier and making the payment to supplier, how the communication takes place between these departments and all. Take simple case, say we got one order from the customer. Okay, say we received an order from the customer. When you receive the order from the customer, what we have to do, we have to check whether we have a stock availability or not. Say customer placed order. Okay, say customer, there is a customer order for 100 laptops. Okay, we received. Who can receive the customer orders? Sales department. Say sales department received order from the customer for 100 laptops. When sales department gets orders from the customers, what they do is they'll check with inventory department whether stock is available or not. Okay, they check with the inventory department. Say within the inventory department, so only, let's say 25 laptops are available. 25 laptops are available within the inventory department. Our sales department received order from customer for 100 laptops. When we check within the inventory department, only 25 laptops are available. Now what inventory department has to do is they have to communicate with the purchasing department to purchase the laptops so that we can supply to the customer. So now inventory department has to raise the purchase requisition. Okay, so 100 laptops required, only 25 we have. Still we have to purchase 75 laptops. They may plan to purchase more than 75 also, but based on this case we'll proceed. Okay, only 25 laptops are available in the inventory. Now we have to purchase. To purchase the laptops, initially the inventory has to take the responsibility. Okay, how much shortage is there, accordingly they have to provide the data to purchasing department. What inventory department can do is they create the purchase requisition. Okay, they create the purchase requisition. Call it as PR. The inventory department creates purchase requisition. What information you can find in the purchase requisition? What items required, how much quantity is required, how soon those items are required, those details can be maintained in the purchase requisition. Why inventory department is creating the purchase requisition? There is some shortage. There is order from the customer for 100 laptops, but only 25 laptops are available in our inventory department or say warehouse. So to purchase the remaining laptops, inventory department is going to raise the purchase requisition. Then it has to get approved. Okay, the purchase requisition what inventory department is creating based on the shortage, that purchase requisition need to be approved within the inventory department by supervisor or say manager. Okay, so approvals are required for the same. What is the primary responsibility of inventory department? Stock maintenance. Okay. Okay, within the inventory department or warehouse, what we do, we maintain the stock. We maintain the stock. If there is any shortage, the inventory department should take the responsibility of creating the purchase requisition, and internally within the inventory department, the purchase requisition should get approved. Then the inventory department will pass that information to purchase department by stating, so this is a purchase requisition which got approved. Accordingly, you can go ahead and purchase. So that is the process inventory department follows. Ideally, we maintain the stock within the inventory. If any shortage, inventory department should raise the purchase requisition and they have to get the approvals. Once purchase requisition is approved, the inventory department will inform to purchasing department to purchase the same. Now, based on approved purchase requisition, based on approved purchase requisition, the purchase department, that means inventory department will pass this purchase requisition information to purchasing department. Then purchasing department will create RFQ, request for quotation. They create request for quotation. That means they request suppliers to provide the quotation. Okay, so as per this purchase request, say we have laptop. Please. Okay. So as per so sorry. So here what they do, they create the purchase requisition. And that should get approved, right? Approvals are required. Once purchase requisition is approved, once the purchase requisition is approved, the inventory department will share that purchase requisition information with the purchasing department. Based on that, they create the RFQ, request for quotation. Okay, the purchasing department should create the RFQ, request for quotation. So here, what is the in purchase requisition? How much quantity is they specified? Say 75. Now, purchasing department has to purchase 75 laptops. So they'll specify within the request for quotation, like we need 75 laptops. So these are the configuration details or so brand we require. That's how they specify the information, and they request purchasing department request the suppliers to provide the quotation as per our need. So our requirement is 75 laptops we required, and we are going to ask the quotation from the different suppliers. Whenever purchase department will request for quotations, suppliers will provide the quotations. Okay. So suppliers will provide the quotations, the purchasing department will receive the quotation. Receive quotations from suppliers. Whenever purchasing department is going to request for quotation, suppliers will provide the quotation. After receiving the quotation from the different vendors or suppliers, the quotations need to be analyzed. Which supplier is giving at best price? Which supplier is giving the best terms? That means one supplier can say the laptop price is 25,000 rupees, but we have to pay immediately. Other supplier can say laptop price is 27,000 and we can pay within 1 month. Other supplier can say laptop price is 28,000 and we can pay within 3 months. So this is how we may get the quotations from the suppliers. So we have to look into all the quotations. So that we call as quotation analysis. Okay, that we call as quote analysis, or you can call as quotation analysis. Right? That we call as quotation analysis. Quotation analysis is nothing but what are the quotations we are receiving from supplier. We have to check which supplier is giving at best price and who is giving the best terms, and other terms and conditions also we can look into. So by doing the analysis, we can find out which supplier is giving the best quotation, best price and best terms, and other points we can consider. So by doing the quotation analysis, you can choose the best quotation. You can choose best quotation. After identifying the best quotation, we can place the order to that supplier. Okay, after choosing the best quotation, which supplier is giving the best quotations, once you identify, you can place the order to that supplier who is going to do that activity, purchasing department. So that we call as purchase order. Okay, we place the order to supplier to purchase. That is the reason that we call as purchase order. Here we create purchase order. PO we call. To purchase the items or to take the services, we place the order to supplier that we are calling as purchase order. Once we place the order, supplier will respond to that order by supplying the goods or material whatever we require. Okay, so we place the order. Within the purchase order, we can specify who is the supplier and what items we require, how much quantity of items required, what is the price, okay, in how many days we need those items, and to where supplier has to send those material or goods or items. This is everything we can specify within the purchase order. Then supplier will supply that items, in our case laptops. Okay, supplier will supply those laptops, then we can record the receipt. Say we received 75 laptops, then we have to record in our books as we received 75. That we record as a GRN. Okay, GRN stands for goods receipt note. Or simply we can call as receipt. Goods receipt note. Okay, what are the goods or say items we received, for that we'll make a note. As 75 laptops we received, we create a receipt note. Once we receive, if any item, any laptop is damaged or not in good condition, ideally we have to return back to the supplier. If required, we perform the purchase returns. Okay, required we do the purchase returns. This is what typically we can manage with the purchasing department. In some companies, there will be separate department to do these activities like requesting for quotations, to raise the RFQs, to receive the quotations from supplier, to do the quotation analysis, to choose the best quotations. To perform these activities, there could be a separate department called as sourcing. Okay, you can have a separate department called as sourcing to deal with these activities. In some organizations, you can see like the purchasing department itself will handle all these activities. Okay, so these activities we can call as sourcing activities. These activities we can call as purchasing department related activities. It depends on the company who are going to manage these activities. So these are the few points we have to understand before we proceed with the next step. Any questions here, please?
So one question, right? Request for the quotation, which there is a step, right? And receiving the quotation from the supplier and doing the quotation analysis. Is this step is recorded in the EPS?
These are recorded where?
In the EPS, is there any table or the screen where we record this? Like uh, we have requested for the
We have.
quotation, or we.
We have.
Hmm?
We have. In sourcing application,
Okay.
you can do that.
Okay.
Yeah. Any questions to understand these few points? Your inventory to maintain the stock ready. But no questions. See how we created, how purchasing department is creating RFQ based on purchase requisition. Okay, the based on approved purchase requisition, the purchase department is creating RFQ. So there is a communication between inventory department and purchase department. Inventory department is sharing the approved requisition. Okay, approved purchase requisition information with purchasing department. Based on that input, based on that information, the purchasing department is taking the initiative of requesting for quotations and receiving analysis, choosing, placing order, receiving the material, and if required, they involve in the purchase returns also. Done. Now, what purchase department will do is they'll talk to the payables department related to the goods whatever they receive. The purchase department will inform to payables department as these many goods we received from so and so supplier, please make the payment. That's how they can have a communication. That means purchase department will pass this GRN information to payables department. Okay. And even they share this purchase order information also to payables department. So based on this purchase order and this GRN information, payables department will create purchase invoice in their books. Okay. So based on GRN information, payables department can create purchase invoice in their books. Okay, purchase invoice. This you can call as a supplier invoice also. Ideally, we get invoice from the supplier. Before that, we have to create invoice in the payables department based on what we received. We received 10 quantity means we have to pay for 10 quantity only. We received 100 quantity, yes, we have to pay 100 quantity. That means based on GRN information, payables department creates purchase invoice. What details you can see in the purchase invoice? Who is the supplier? What is the supplier address? How much amount we have to pay? And when we have to pay? How we have to pay? How means through cash or check or bank transfer. Okay, for which items we purchased, all the details you can have within the purchase invoice. So there will be due date. Okay, when we have to pay, there will be due date. Based on the due date, the payables department will process the payment for this purchase invoice. Okay, so the payables department, what they do, they'll make the payment, right? The payables department responsibility is creating the purchase invoices and making the payment. How they are creating the purchase invoice? Based on the GRN information. The purchase department will pass this GRN information to payables department. Based on the GRN information, payables department can create purchase invoice, and by following the due dates, whatever you have in the purchase invoice, they can process the payment. Now, what are the purchase invoice payables department is creating? The purchase invoice can belongs to services or some expenses which are incurred, which are spent, and the purchase invoice may be related to some goods or say items, or it could be related to asset purchase. Let's list out those points. Okay, the purchase invoice may be related to services, or it may be related to some expenses. Okay, and it may be related to items. Items means what we maintain within the inventory, or you can say goods. Okay, like now we are discussing about laptops. The laptop you can call it as item, or you can call as goods. Just anything, just item or goods. Any name, with any name you can represent, and it could be related to the purchase invoice we may record. Okay, for the purpose of asset purchase. Okay, asset purchase. Right. So asset purchase. So with these reasons, you can create the purchase invoice. When you take the services from the supplier, you can create the purchase invoice. When you do some expense, when you spend some expense to make the payment for the expense, you may create purchase invoice. Or when you purchase the items to store in the inventory, you may create the purchase invoice. Or else in the organization, you may purchase the asset. Asset means fixed asset, maybe land or building or machinery or computers. For that purpose also, you may create the purchase invoice. Okay. So these are the different reasons why we create the purchase invoice. Now, what point we have to understand? If the purchase invoices belongs to asset related purchase, the payables department should share the purchase invoice information with asset department. Okay, if it is related to services, okay, no need to share. Expense, no. Item related purchases, no. So payables department no need to share purchase invoice information with asset department if the purchase invoice belongs to services, expense or item. But if the purchase invoice belongs to asset related purchase, that purchase invoice information payables department should share with asset department, so that asset department will maintain that information in their books as what asset they purchased, and accordingly they can calculate the depreciation based on the usage or time period. They can calculate the depreciation. So if purchase invoice is related to asset, then payables department should share that information with the asset department. Then asset department will maintain their books as a fixed asset. Will create fixed asset. Say the purchase invoices belongs to building purchase. Then they pass that information to asset department. Asset department can create building in their books. Okay, asset they can record. They can record in their books as we purchased on building. This is this cost we purchased. That's how they can maintain the information in the asset department. And based on the usage or time, they can calculate the depreciation. Okay. So when you work on this asset related application, we can understand all these points detail level. Now high level, try to understand how the communication takes place between the departments. Now, the payables department, what are the payments they are processing? This payments information, payables department will pass to cash department. Okay, cash department. What is the responsibility of this cash department? The cash department responsibility is maintaining the bank account. Okay, what are the bank accounts they have in their company? Okay, all the company bank accounts they maintain, and they do the bank statement reconciliations, BRS, bank statement reconciliation. Okay, the cash department responsibility is maintaining all the company bank accounts and performing the bank statement reconciliations. Now, the payables department will share the payment information with the cash department. Why they are going to share payment information with the cash department? To perform the bank statement reconciliation. What cash department will do is they get the bank statement from banker. Okay, they get the bank statement from banker. The other side, what are the payment information they are getting from the payables department? They'll maintain the data other side. Okay, from payables, the payment information they'll maintain here. Say as per payables, what are the data they received from the payables? As per payables, say they received 10 payments are processed. The payables department is informed to cash department as in the current month 10 payments are processed. Now they cross-check this information with the bank statement. Okay, as per bank statement, what bank statement says? The bank statement says only 5 payments are processed. Payables department is informing to cash department we processed 10 payments. Okay. And when they get the bank statement from banker, the cash department identified only 5 payments are processed. Now they have to find out the reasons. As per payables department, they processed 10 payments, but only 5 payments are presented in the bank statement. The reasons could be, yes, payables department issued 10 checks. That is the reason they are informing to cash department as 10 payments are processed. The 10 checks are not deposited in the bank for clearing purpose. Only say 5 are deposited and cleared, that information is reflecting in the bank statement. The remaining 5 payments, whatever they given the checks to the suppliers, those might be with the suppliers or they might have submitted in the bank. Those may be in the clearing process. That is the reason those are not reflecting. Or else take the reverse case. So the cash department received a report from the payables department as they processed only 5 payments. But bank statement shows 8 payments are processed. Okay. Payables department is saying only 5 payments we processed. But as per bank statement, 8 payments are showing for the current month. Then cash department should find out the reasons. The payables department might have issued 10 checks, but they might have forgot to enter in the system. That could be one reason. Or else there may be some fraud happened in the organization. This is how they have to analyze and find the reasons. For that, they do the bank statement reconciliation. Bank statement reconciliation, nothing but the cash department cross-check the data from payables department and bank statement from these two statements. Payables, they provide the data related to payments. The banker will provide the bank statement related to payments, what they process. These two records, they cross-check that we call as bank statement reconciliation. Okay. that we call as bank statement reconciliation. Right, any questions here, please? Okay. Any questions to understand this point, please? Okay. Payables department is creating purchase invoice based on the GRN information, or you can say based on the receipt information. And by following the due date, they have to make the payment to suppliers. If purchase invoices belongs to asset related purchase, that information they have to share with the asset department. Based on those details, asset department will create fixed asset in their books. Okay, fixed asset in their books. And the payment information, payables department is sharing with cash department. By using that payments information, cash department can perform the bank statement reconciliation. So these are the points we have to understand. Any questions on the same, please?
Lakshman, like if these are not fixed asset, like if they are organization purchasing any software, then
Okay. So that is normal, like that you are taking the subscription. Okay. So that ideally you don't need to maintain in the fixed assets. That is not a fixed asset for the organization. That ideally you are taking the service related subscription. That you don't need to share with assets, asset department. Okay. You don't need to share with the asset. The physical assets. Okay, the physical assets you can share the information to asset department. Yeah.
Hi, everyone. But in case the example which you have taken for the 25 laptops, so the laptop also comes under the company asset, right? In that scenario.
No. Here 2 points. If you are using the laptop in your business, that is asset. If you are doing the business with a laptop, that is not your asset, that is inventory item only. And you buy the laptop, where you are going to place within the warehouse, inventory.
Yeah, but in case it is using for the business purpose, like I mean, like let's take the employee.
If you are going to use for business purpose, then that you can take. Say, one employee required on laptop. Okay, then you purchase it. Then you can take that information to asset department and you can make. What purpose we are buying, that is also very important. Here, what purpose we are buying? We got order from customer for 100 laptops. Only 25 laptops are available in the inventory department. The rest of 75 we are buying. We are buying 75 not to use in the organization to sell. So that is not asset. That is inventory item. For your employee, if you are buying the laptops, yes. Those you are not,
then definitely
is in the warehouse.
Asset.
That is asset.
Okay. Yeah. Thanks.
Any other questions?
Okay. And Lakshman, can we transform like any inventory or item to asset item if we want, or once it's converted to inventory item, it can't be changed to asset item?
No, for that you have to follow the process. Okay. You have directly from inventory, you cannot move that information to assets. You have to create there you have to release it again. You have to take it as you want to create asset in the fixed asset. Directly you cannot do that. Okay, from inventory to assets you cannot do that. So when we are getting that item into organization, we have to decide, okay, what type of item is that. Accordingly, you will just receive that item into organization and you will place in the different departments. And later, say you have some laptops and you want to use for internal purpose. Again, you have to follow the process to update that information in your departments. This is how we are reducing one quantity within the inventory department because we are going to use in our organization as a asset for employees or other purposes. So accordingly, you have to update the records and you can place that information in the asset department. Directly, you cannot update. Yeah. Any other questions?
And Lakshman, this bank statement reconciliation process, it happens at the month end, or it happens like every day?
Every day not. Okay, ideally they do it periodic base. They can do every month, or they can do in between also. So that they do based on the volume of transactions. If volume of the transactions are more, the payments what they are paying, the volume is very high, they can do with a more, the frequency would be less. Okay, they may do weekly, 10 days once, 15 days once, or else monthly. You can there is no certain interval. So ideally we do monthly once. If you want to do before that, it's possible. It's all about, anyway, payables department will provide the payments information, and they have to just get the bank statement. They can just get the bank statement from and to specific time period, and accordingly they can have information from the payables department also. Then they can do the reconciliation. Okay, there is no time frame to perform it. You can choose the time frame and you can do it.
Okay, and how does these bank statement comes to our system? Like bank sent and someone from business enters it into system.
There are two options.
Like that.
Okay. One is you can get the bank statement from the banker that you can enter into the system. And if banker is going to provide the bank statement in the specific formats, we have BI2 and SWIFT 940. There are specific formats. If you get those statements in those specific formats from the banker, those can be loaded into system. That is also possible. But banker should provide the bank statements not in the Excel or PDF and other formats. They have to provide in the BI2. Okay, or SWIFT 940. These are the international accepted formats which banks can provide. So if you get the bank statement in those formats, that information you can load into our system. So without entering, you can just you can perform the bank statement reconciliation. Otherwise, you have to enter through manual process and you can perform the reconciliation. Yeah. Any other questions? Okay, no questions. Fine. Now, these are the points we have to understand. Now, what payables? These are all the different departments that are just involving the different activity. Inventory department is involving activity called as maintaining the stock, and if there is any shortage, they are raising the purchase requisition. They are getting approvals. They are passing that purchase requisition information to purchasing department. Based on that, they are creating RFQ, receiving quotations, analysis, choosing best, placing the order to supplier. Before placing the order what they are creating internally, that should get approved. Approvals are required. Okay, for purchase order also approvals are required. The purchase department creates purchase order and they have to get the approvals internally by manager or supervisor who got authority to approve. They have to get the approvals for the purchase order. The approved purchase order only they'll send to the supplier. Then supplier will supply the material or goods, whatever we are requesting. Whenever our organization receives the same, we create the GRN, goods receipt note, or call it as a receipt. If anything wrong with the received stock, we do the purchase returns. Okay, we do the purchase returns. So finally, the purchasing department will share the GRN information with the payables department. Along with the GRN, definitely there will be purchase order information also. So based on the GRN information, payables department can create purchase invoice. Within the purchase invoice, we can have details like who is the supplier, what is the address, and how much amount, which item we purchase, when we have to pay, how we have to pay, all the details we can have within the purchase invoice. The purchase invoice can belong to services, expenses, items, and asset. If the purchase invoice belongs to asset related purchase, the payables department should share that information with the asset department. Based on that, asset department can create the fixed asset and they calculate the depreciations based on the certain intervals. And in these three scenarios, the payables department no need to share that invoice information to anyone, any department. So once they arrive at the due date, they'll make the payment. That's all. No need to share with any other department. So whenever the payment is processed by payables department, they have to report all the payments information to cash department, because cash department takes the responsibility of doing the bank statement reconciliation. The cash department so get bank statement from the banker and payments information from the payables department. After getting these two records, payables department report and the bank statement report related to payments, they do the bank statement reconciliation. They'll find out the variance, what are the reasons, they'll identify and they'll fix it. And along with that, the cash department responsibilities maintaining the bank accounts also. Now, different departments are maintaining the different data, right? Asset department, assets data, payables department, invoice and payments data, cash department, bank accounts data, purchasing department, purchase orders and other data, inventory department, stock data. So if you want to prepare the financial reports, you don't have data in one place. That is the reason the common department can collect the data from all these departments. Okay, there could be some common department. There may be people in the organization who takes the responsibility of collecting the data from different departments, and they can prepare the reports. To prepare the financial reports, okay, the common department can collect the data from inventory, purchasing, cash department, payables, and asset department. From all these departments, okay, from all these departments, common department can collect the data and they can prepare the financial report. Okay, financial report. To prepare the financial reports, common department can collect the data from all the departments so that asset data would be available here, payables related data would be available here, cash related data would be available, means this data, okay, assets data and depreciation data, invoice and the payments data, and bank accounts related data, and stock related data, all the data will come to common department. There we can prepare the financial reports. So this is how the purchasing process can be initiated and can be executed. This step called as payment. Please go on mute. Jagadish, please. Fine. So this is the process. Say today you want to purchase, you have to initiate the process. Okay, you have to check the stock availability and you have to raise the purchase requisition approval. Again, this sort of process you have to follow. Tomorrow you want to purchase, same process. So it is kind of cycle. Whenever you want to purchase something, the inventory department, purchasing department, payables department, all should involve in the process. It is kind of cycling activity. So this process, kind of cycling process, okay, kind of cycling, okay, repeated activity, right? Whenever you want to purchase, these departments should involve. So that is the point we have to notice. It's not like one time we have to say today we want to purchase. Today we want to purchase the laptops, say Dell laptops. We raise the requisitions and we get approvals and quotation process, analysis, choosing the best quotation, placing the order, receiving material, invoice and payment. We do this. Tomorrow you want to purchase the Dell laptop. So you create the purchase requisition, but this you no need to do. Yesterday only you identified a supplier, okay, who is giving at best price. So yesterday you identified the supplier. Again today you no need to get the quotation from the different supplier. There won't be much difference in 1 day or 2 days with respect to price for any item. So if you are going to buy the laptop, maybe after 1 month, again you can go for quotation process. You can get the quotations and you can analyze, you can choose the best quotation. This is another point we have to remember. Now, so to maintain the stock and to create the purchase requisitions and to deal with the approvals and to manage other inventory department related activities, Oracle is providing an application called as Oracle Fusion Inventory Application. Okay, for inventory department purpose, Oracle is providing an application called as Oracle Fusion Inventory. Okay, or you can say Oracle Fusion Cloud Inventory also. Not required. We discussed what is the meaning of cloud. Cloud means it's all about accessing the applications through Oracle servers. That's all. That you don't need to include everywhere, but just remember that. Okay. By using Oracle Fusion Inventory application, we can maintain the stock and we can create the purchase equations and we can approve them and we can do many other inventory department related activities. For inventory, the short name is INV. Okay, so INV. Right? Right? By using this Oracle Fusion Inventory application, you can maintain the stock, you can raise the purchase requisitions and approvals and all you can manage. And to do these activities, Oracle is providing application called as Oracle Fusion Purchasing Application. Oracle Fusion Purchasing. Okay, that we call as a PO. Okay, Oracle Fusion Purchasing Application. Oracle is providing with this all activities we can do. Reality, these activities we cannot do from purchasing application. But when you look at the business, generally purchasing department can handle that. But when it comes to system, when it comes to our fusion applications, this RFQ creation, receiving quotation from the suppliers and recording it, analysis, and all these activities you can do by using the application called as sourcing application. Oracle Fusion sourcing application is available. So by using that application, you can do all these activities. But reality, by using the Fusion purchasing application, what we can do these activities. Okay. So creating the purchase orders, approvals, recording the receipt, GRN, purchase returns. These activities you can do from purchasing application. Okay, notice that part. And purchase invoice and payments. The payables department is involving recording the purchase invoices and to processing the payments. To record the purchase invoice and to process the payments, okay, we have application from Oracle that we call as Oracle Fusion Accounts Payable. Oracle Fusion Accounts Payable application, not accounts. In short, we call as AP. Okay. AP. Right? So by using Oracle Fusion Accounts Payable application, we can create the purchase invoice and we can process the payments. And if purchase invoice belongs to asset related purchase, the payables department is sharing with asset department. What asset department is doing? They are maintaining the same information as a fixed asset and they are calculating the depreciation. To create the fixed assets and to calculate the depreciation and to perform many other asset related activities, we have an application from Oracle that we call as Oracle Fusion Fixed Assets. Okay, Oracle Fusion Fixed Assets. By using Oracle Fusion Fixed Assets application, you can create the fixed assets and you can calculate the depreciation and many other activities also we can do. That we'll see when we are working on the system. For this short name is FA. Okay, the short name is FA. the payments information. What are the payments are processed by payables department? The payments information the payables department will share with cash department. What cash department is doing? They are maintaining the bank accounts or they are doing the bank statement reconciliations. To maintain the bank accounts and to perform the bank statement reconciliations, for cash department, Oracle is providing one application called as Oracle Fusion Cash Management. You can call as CM or CE. Okay, because there is another application called as cost management. Cost management means CM. Okay, that is the reason we have some alternative name also for this cash management. CE means cash entry. You can use the term called as CM. Yes. So CM or CE, that is short name for cash management. So here we have other department who's taking the responsibility of collecting the data from all the departments to prepare the financial reports. How all these departments are doing, how organization is doing to understand. So this common department is taking the responsibility of preparing the financial reports. To collect the data from all these departments or say from all these applications, Oracle is providing one application called as Oracle Fusion General Ledger application called as GL. Short name is GL. So we collect the data from all the applications to General Ledger application. Okay, from inventory, from purchasing, from cash management and payables, fixed assets, from all the application, we can collect the data. So data flows like this. Okay, from all the application data flows like this. That's how communication takes place. Okay, here why I mentioned like the representation like from fixed assets to GL and GL to fixed, that there will be two-way communication. Okay, data goes from fixed assets to general ledger. From general ledger, you can access the data which is available in the fixed assets. There will be two-way communication. What exactly meaning of this two-way communication and all, we'll see when we are working on the system. Okay, so this is what we have to understand. If you want to purchase and pay, these are the points we have to understand with respect to our Fusion applications. Okay, so if you want to purchase something, there should be requirement, there should be need. Okay, so inventory will take the responsibility. The process is getting initiated by inventory, then we are purchasing and we are paying, and the information we are sharing with cash department, asset department and common department. Applications point of view, the names you can see already we discussed. Okay, just remember all this, the names, just remember. As of now, just remember what we discussed. Once we start working on those applications, you can understand a lot of other details and we can understand more detail level each and everything what we have as a part of that application. To understand this process flow, just remember these names and these activities, what department or which applications what we can do. So this process as per our Fusion applications we call as P2P cycle. P2P cycle. P2P stands for Procure-to-pay. P stands for procure. Okay, P stands for procure. The process is getting initiated with the procurement, right? How procurement is getting initiated? First, we are identifying what we need. We are raising the purchase requisition. Then, purchasing department is purchasing. The process getting initiated with the procurement. Procure. The 2 is TO2. Another P is pay. Procure to pay. Okay. So procure to pay. Everything is stitched up. Yeah. Procure to pay. There's few things gone. Let me rename those. This is Oracle Fusion purchasing application. Short name is PO. Okay. Here the payables department, we have application called as Oracle Fusion accounts payable. Short name is AP. And for cash department, we have application called as Oracle Fusion Cash Management. The short name is CM, or you can say CE. Cash Management, or you can say Cash Entry System. And for asset department, already discussed, the application name is Oracle Fusion Fixed Assets. Short name is FA. And for common department, the application name is Oracle Fusion General Ledger Application. So GL. Okay. So this is how we have a different applications. So this process, okay, this complete process we call as P2P cycle. P2P stands for Procure-to-pay. Procure-to-pay cycle. So right from procurement, the procurement process getting initiated by inventory department by raising the requisition. If they don't raise the requisition, there is no activity from purchasing department. So the P2P cycle, the procure-to-pay cycle is getting initiated with the requisition and it is ending with the payment, you can say. Okay, we are paying, the process will be ended. Now the rest of data sharing we are doing between these departments. The payables is sharing purchase invoice information with asset department if that is related to asset, the payment information with cash department, and all the data to common department or general ledger application. That is the internal process. But this is a core process. Which departments or which applications are involving in the P2P cycle? The inventory, purchasing and payables, these three departments are involved in the P2P cycle as a key departments. The rest of cash department, asset department and common departments, these are just taking the data, that's all. Whatever the data is available in based on this process, these departments are collecting the data from tables and other departments to maintain the data as per their department requirements. So this is what we have to understand. This is what we call as P2P cycle. Why we are calling a cycle? Whenever you want to purchase, you have to follow this cycling process. It will keep repeating. Today you want to purchase, after 10 days, or today you want to buy laptop, tomorrow you want to buy phone, you want to buy something else. So these departments are involved. It is repeated activity. Okay, this is a repeated activity. So that is the reason we are calling it as cycle. So this is all about P2P cycle, procure-to-pay cycle. We should understand this and we should remember, so that when we are going to work on this application, for example, if you are going to work on Oracle Fusion Accounts Payables AP, you can have an idea. If I am going to create the purchase invoice, you can understand the background, what happened. This is what happened. We received the material, that is the reason we are creating purchase invoice. Without understanding this directly, if you go and create purchase invoice, so that won't help us in many ways. So you have to understand the complete process flow so that wherever in whatever the application you are going to work on, you can understand the relevant information from where this data is coming from, where it is going, where exactly this is standing. All these points you can understand. Any questions on this P2P cycle from anyone, please? Okay. We do many other things also in the different applications, but here to understand this P2P cycle, what are the information we require, we are addressing in this discussion. Okay. Once we start working on the each and every application, we can discuss very detailed level and we can work on all those features or whatever we have with respect to that application. To understand this P2P cycle, any questions, any clarifications required, please?
But in real-time scenario, we will be dealing only with the accounts payable, right, Lakshman?
Not accounts payable. We deal with these applications.
Okay, FA and CM as well. Yeah, I mean to say, like in the P2P cycle, though it is into the inventory and the purchasing as well, but
Yes.
we'll be dealing with this.
Correct.
Sorry.
Correct. Yes.
Yeah.
What you said, that's true. Yeah, we deal. If you talk about this is the core applications or departments are involved. Yes, this is our area. So we deal with this only, not with this.
Yeah.
But in our classes, I'll take you through those also, basic level, so that you can have a better understanding. So when you are working on Oracle Fusion Accounts Payables, you have some issue with the purchase invoice. Okay, you should be able to understand why you have some issue. Okay, what's wrong with the purchase order, what's wrong with the GRN information, that you should be able to cross check. So that is the reason. So primarily we focus on our applications. Okay, these applications. Along with that, I'll take you through these also. What level of knowledge we require when we work on these applications, I'll cover that. Yeah, I'll take you through complete P2P cycle. Okay, but we don't focus on Oracle Fusion Inventory and Oracle Fusion Purchasing. The basic level we can go through, so that would be good information for us. And our primary focus would be on our finance related applications. Any other questions, please?
Yes, Lakshman. Under the purchasing, will you take us through the difference between sourcing and supply, if any?
Oh, that is completely procurement course. Okay, in the procurement we have
Okay.
supply or you can call as I supplier. Okay, sourcing application, procurement contracts is all. That's a different course. Okay, here when we are learning the financials, what basic knowledge is required from other areas also, I'll cover that. That would be good information. That's all.
No.
Yeah.
Okay, thanks.
Other questions, please.
In the payment module, Lakshman will cover how to make bank payments and all those things. That will be.
Yeah, within the payables only we have that payments also. We deal with that. When we are dealing with the payables, we'll go through that payment related different options we have. Okay, I'll take you through everything. How manual you can process, how you can automate that. Everything we'll discuss and we'll do.
No.
Fine. Please go on mute. Somebody unmuted. There is some noise, some fan sound or something is coming out. Please. Yeah.
And Lakshman, are we going to configure also all the modules?
Sorry?
Are we going to set up also all the modules?
Yeah. Without setting up, you cannot do anything. All right? We will set up. Okay, all these applications we are going to set up. The real time, how we do the implementation, how we set up the system, the same I am going to take you through in these classes. Okay? Follow the same. Any other questions here, please? Fine, no questions. Now we'll see the sales cycle, sales process. Okay. So here you could see the departments like inventory, sales department, receivables department, common and the cash departments. Say the same example I'm taking, whatever the example I took here, I'm taking the same example. There is order from the customer for 100 laptops. When you get order from the 100 laptops, who get the order? Sales department. That means sales department, whenever they get the order from the customer, they record that information in their books. Okay, as in they create sales order SO, sales order. The receivables department received order from the customer. As per the customer order, 100 laptops are required. Now what sales department can do is they'll check with the inventory department whether 100 laptops are available or not. Okay, they'll check. What is the responsibility of inventory department? Already we discussed. They maintain the stock. When sales department is checking with inventory department is saying, yes, we have 1,000 laptops available. If laptops are not available, they'll initiate this process. Okay. So if laptops are not available, inventory department will raise the requisition, they get approvals, they'll pass that information to purchasing department, and they go with this process what we discussed. Now let's take the case as stock is available. If stock is available, they can supply to the customers, right? The sales department received order from the customer, they are creating as a sales order, and after creating the sales order, what are the orders we get from the customers? First we have to take those orders, then we have to check with inventory. If stock is available, we can confirm the sales order. Okay, we'll inform to the customers, you placed order for 100 laptops, yes, we are going to supply those. That means giving confirmation to the customer as we are going to supply the same, we call it as a booking the sales order. So a book sales order. Okay. So whenever we receive the order from the customer, the sales department is recording as a sales order. And next step is they are checking with the inventory department whether stock is available or not. If stock is available, the sales department has to give the confirmation to the customer. Whatever the confirmation they are giving in their books, they record as a booking the sales order. Okay, they book the sales order, means they are giving the confirmation. Done. They received order, they confirm to the customer as we are going to supply. Now the next step is the material whatever available, or else the goods whatever available within the inventory department, those we have to ship to the customer. Okay, those we have to ship to the customer. To ship to the customer, we have to understand the inventory structure, how inventory can be managed. Scroll little down in the same page. Here you can see. So this complete area, okay, this complete area you can take as a inventory area. Within that, the partitions, ideally they do the partitions. Okay, those partitions we can call as sub-inventory. Sub-inventory 1, 2, 3. Why that warehouse can be partitioned? To maintain the different items separately. Okay, say they are dealing with the bikes they'll store separately. They are dealing with the mobiles they'll store separately in the other sub-inventory. Okay, they are dealing with some machinery, they store separately. Okay, so they are dealing with the books, they store separately. Okay, to maintain the different items separately, they can do the partition for the warehouse. Okay, if they have warehouse, they can do the partition. The partition you can call as a sub-inventory. The total area is warehouse or inventory organization, you can say. The partitions you can call as sub-inventories. Now say you are purchasing from supplier. When you purchase from supplier, so you are purchasing 100 laptops. So supplier will send 100 laptops, will take into some specific area. You take into specific area, that area you can call a staging area. First items will come to that area. From there you can place in the right sub-inventory. Okay, first the item will come into the staging area. Staging area means the receiving point. There will be receiving point to receive the items whenever we get from supplier. Then we'll place in the right place. The right place is nothing but sub-inventory. You are going to supply to customers. So in that case, what we have to do is, which item we are going to supply, in which sub-inventory we have that item, we have to pick and we have to place in the shipping area. The staging area, receiving area, shipping area, total all are same. Some common area would be there. Based on the process, you can call as, that is a receiving area. Receiving area means when you are receiving, you call as receiving area, or else when you are shipping to the customer, you can call as shipping area. Okay, we can pick the items from the sub-inventory and place in one place, one area, that you can call as shipping area. Here you may do the packing and all. Then truck will come to the same location, same place, and you can load items into truck and you can ship to the customer. Okay, by default that you can call as staging area. Okay, the staging area you can use for the purpose called as receiving purpose or shipping purpose. To take example of home, when you enter into the home, you enter into hall. From the hall, you may go to the study room or bedroom or kitchen. So if you want to go to the kitchen or bedroom or some other room, the common space is hall. If you want to go out from the home, from the bedroom or kitchen, you have to enter into the hall. From there only you can go out. So in the same way, in the warehouse also the same concept is applicable. If you are receiving any items, first item will come into the staging area, which is equal to hall, and that you can move to right sub-inventory. If you are going to ship the material to the customer, from specific sub-inventory you have to move the material to the common place, staging area or called as shipping area. From there you can move to customer. So this is the point you have to understand. Now, so we received order from customer and we booked the sales order. Now we have to ship. If you want to ship, the first step is you have to move the material from sub-inventory to staging. Who can do this activity? Inventory team. Okay, inventory team, or else in some organizations there will be separate team for shipping also. That depends on the organization size. So inventory team can do it, or else there could be separate shipping team and all who will take care of these activities. Doesn't matter who is doing, what exactly happening we have to understand. So whenever the item is moved from sub-inventory to staging, who are going to do, say, inventory department. So the inventory department will pass that information to sales department. Already we moved the material from sub-inventory to staging, that is ready to load in the truck. So that they record in their books as a pick release. Pick release. Pick release is nothing but moving material from sub-inventory to staging, we call as a pick release. Why sales department is recording what exactly going on? Customer can call to sales department to know the status of their order. So they should be able to answer to customer queries. That is the reason what exactly happening against that sales order they have to track in their books. So whenever we move the material from sub-inventory to staging, the inventory department will inform to sales department as against so-and-so sales order already picking is happened. Picking means, pick release means moving material from sub-inventory to staging. The next step is the inventory or shipping department has to ship the material from staging to customer location. Whenever they ship the material to customer, the inventory department will inform to sales department, shipping also done. Then they'll update the status as a ship confirmation. Ship confirmation. So the picking and ship confirmation is happening in the inventory department by inventory department or by shipping department, doesn't matter for us. But sales department should aware what is going on against the sales order. Now, if any customer is going to call, the sales department can answer. Okay, what is the status of my sales order? They can say already shipping also done, already just the transportation, just the process is already just we initiated that shipping. We loaded the truck today and it will reach your location by tomorrow or within 2 days or 3 days. That's how they can have a information to just pass to the customers. After shipping is done, say customer received the items and they identified 1 or 2 items are damaged. In that case, customer will return those items to sales department. Then sales department will record the sales returns. Okay, say 100 laptops we ship to the customer, 2 got damaged. Then the sales department should record the sales returns. So this is what we have to understand, what exactly sales department can take the responsibility. Okay. Whenever there is order from customer, sales department should record in their books as a sales order. They have to check for the stock availability. If stock is available, they can book the sales order. And within the inventory, whenever they move the material from sub-inventory to staging, that we record as a quick release. Whenever we move the material from our inventory automation to customer location, that we record as ship confirmation. If customer is going to return, if any returns from the customer, that we record as a sales returns. Okay, that we record as a sales returns. These are the points we have to understand. Now, what sales department is going to do is, the sales department will pass the ship confirmation details to receivables department, stating the 100 laptops we ship to so-and-so customer, these are the details. That's how the sales department will pass this ship confirmation details to receivables department. Based on the ship confirmation details, sales receivables department will create sales invoice in their books. What information you can see in the sales invoice? Who is the customer? What is the customer address? What items are sold by our sales department to that customer? And what is the amount? What is the price for the item? And what is the total amount? And when customer is going to pay, okay, what are the terms sales department is accepted? They might have accepted you have to pay in 1 week, 10 days, or 1 month. So accordingly, the payment terms. Okay, when customer has to pay, all the details we can have within the sales invoice. The sales invoice can be created based on the ship confirmation details. Okay. So whenever receivables department will receive the payment from the customer, they'll create the receipt. Of course, directly customer won't pay. The receivables department follow up the customer. They receive the payment from the customer. Whenever they receive the payment from customer, we create receipt. You can call it as cash receipt, or you can say just receipt or customer payment. You can call it customer payment also. Yes, customer is going to pay. So simply you can take as a receipt. So when we get the payment from customer against the sales invoice, that we record as a receipt. Now receivables department will share this receipt information to cash department, because they have to do the bank statement reconciliation. Already we discussed what is the responsibility of cash department. They maintain the bank accounts and they do the bank statement reconciliation. Okay, they do the bank statement reconciliation. Now receivables department will pass the receipts information to cash department. then what they do is, what are the receipts they are getting from receivables department, they'll maintain those receipts here. Say they received 12 receipts. The receivables department is saying we received 12 payments. And other side they get the bank statement. So as per bank statement, only 5. Yes, as per receivables they received 12 payments. Bank statement saying only 5 payments are reflecting in the bank account. That means receivables department received 12 checks. They might have submitted only 5 checks in the bank for clearing purpose. Okay, they submitted only 5, those 5 got cleared. Or else, say 12 checks they submitted in the bank to encash it. Okay, but out of 12, 5 only cleared, remaining 7 may be under clearing process. So this is how the cash department should take care of this reconciliation part. Okay, in P2P cycle, what we are doing? We are doing payments related reconciliation, only payments. Okay, payments data will come to cash department. The bank statement reconciliation, what we are doing, that is related to only payments reconciliation. In this process, the cash department will do receipt reconciliation. Okay, here only receipts reconciliation. Now, finally, all these departments will share the data with common department to prepare the financial reports. Okay, to prepare the financial report. Okay, to prepare the financial report. This is what we have to understand when we sell to the customer and when we collect the payment. Here, to maintain the stock and to check the stock availability for inventory department, already we discussed, there is one application from Oracle. The name is Oracle Fusion Inventory. The short name is INV. Okay, the short name is INV. And what sales department is doing? They are creating the sales orders, they are booking the sales orders based on the stock availability. Okay, and they are doing the pick release, means they are doing in the sense that is done by, say, inventory department. They are tracking, they are just recording the status of the sales order like pick release, ship confirmation. If any returns from the customer, they are managing those returns as a sales returns. To perform all these activities, we have an application from Oracle that we call as Oracle Fusion Order Management. Okay, we have an application called as Oracle Fusion Order Management, OM. By using Oracle Fusion Order Management, you can do all these activities. And the sales department, or say order management department, is going to share this ship confirmation information with the receivables department. Whenever we have a ship confirmation takes place, this information need to be passed to receivables department so that receivables department can involve in the collecting the payment from the same customers. So based on the ship confirmation, the receivables department is creating the sales invoice. Whenever they get the payment, they are creating the receipt against the payment. So to create the sales invoice and to create the receipts, we have an application from Oracle. The name is Oracle Fusion Accounts Receivable. The short name is AR. Okay. By using Oracle Fusion Accounts Receivable application, you can create the sales invoice and you can create the receipts. To maintain the bank accounts and to perform the bank statement reconciliations, we have application called as Oracle Fusion Cash Management. Already we discussed in the P2P cycle. Oracle Fusion Cash Management. Or CM or CE. Fine. So by using Oracle Fusion Cash Management application, you can maintain the bank accounts and you can do the bank statement reconciliations. From all these departments or from all these applications, data need to be collected into one place to prepare the financial reports. For that purpose, to collect the data from all the departments or say from all the applications, system point of view applications, business point of view departments. So we have an application from Oracle, that is Oracle Fusion General Ledger application, GL. Okay. We have a General Ledger application. So this is how we have a different applications to manage that specific department related activities. Now this process, okay, this is also kind of cycle. You got order from the customer today, you have to record the sales order, you have to check with inventory, you have to book it. So you have to track whether pick release and ship confirmations are happened or not. If any returns from the customer, sales returns we have to perform. That information, the ship confirmation details need to be passed to receivables department, and they create sales invoice, they'll create receipt. Receipt information need to be shared with the cash department for bank statement reconciliation. All the data need to be shared with the common department application point of view, general ledger application, GL. So again, if you get order from the customer, same process. Again, if you get another order, same process. This is also cycle. So this process we call as O2C cycle. O2C. It's not a formula, just O2C. O2C cycle. O2C stands for, O stands for order. The process is getting initiated with order. When we get the order from customer, we are initiating the process. Okay, order. 2, C stands for cash. Order to cash cycle. Okay, order to cash cycle. O2C cycle, order to cash cycle. The process is getting initiated with a customer order, nothing but sales order. It is ending with cash. Once we receive the payment from customer, it will be ended. The remaining, these two departments or applications are collecting the data, that's all. They are not involving in the business process. Okay, just it's all about from pay receivables we are sharing the data, and other applications or other departments also we share the data here. And receipt information also we are sharing for bank statement reconciliation. Okay, so primarily these three departments, inventory, sales and receivables, application point of view, inventory, order management and accounts receivable applications are involved in this O2C cycle primarily, and you have to include those also, general ledger and cash management, because the data communication is happening. So this is what we call as O2C cycle, order to cash cycle. Any questions on this, please?
Lakshman, when does happen ship confirmation?
Sorry?
When does happen ship confirmation?
When does?
Happen ship confirmation.
When does ship confirmation happens? It's not like when happens. When happens, we record here. When happens, so customer is asking to ship the material in 5 days. In 5 days, our organization will ship the material to customer.
Yeah, mean to say when item moved from staging to what will be the next
That we
stage?
discussed, right?
It will be
You mean like what does it mean by ship confirmation? Ship confirmation is nothing but moving material from our staging to customer location. Moving material from sub-inventory to staging we are calling as pick release. Okay. From here to here. This location, this area also our inventory location only. But when we move the material from here to customer location, that we call as ship confirmation. Or simply you can say, when you move the material from our inventory to customer location, that we call as ship confirmation. Okay, here we do the ship confirmation. It is not based on whether customer received or not. Yes, we loaded material or items into truck or some other vehicle, and that vehicle started moving to customer location, then we will mark in our books as a ship confirm is done. Who is going to take that stock responsibility, whether our organization or customer organization, that's a different story. Okay, when we move the material from our inventory organization to our warehouse to customer location, or you can say customer warehouse, that we call as ship confirmation. Yeah, that's the meaning of ship confirmation. Okay. So when you move the material from sub-inventory to staging, we call as a pick release. When you move the material from our inventory organization to customer organization or our staging area to customer location, that we call as ship confirmation. That's all. If item is moved from our organization, it may take 1 day or 2 days, 3 days. Doesn't matter, just we'll update in our books as a ship confirmation is done.
So only once the ship confirmation is done, then we'll start creating the sales invoice receipt, right, Lakshman?
Exactly. When you do that activity, immediately we create the sales invoice and we'll send to the customer. Okay. Any other?
Yeah, do we have, when ship confirmation has been done, do we have auto creation of a receivable invoice, sales invoice?
Sorry? See, your voice is little breaking. Could you please repeat your question?
I'm asking if we have auto creation of sales invoice?
Yeah. Based on ship confirmation, the sales invoice we create in the receivables application. That we can automate. Everything what we are discussing can be automated.
Okay, thanks.
Yeah, thanks. Fine. So this is all about O2C cycle. Just remember what we discussed in the P2P and O2C. Okay, and make a note of that short names. Okay, INV means Oracle Fusion Inventory, PO means Oracle Fusion Purchasing, and one more point here, PO means purchase order also. Okay, what do you mean by PO means? You can say application point of view, PO means purchasing application. Transactions point of view, PO means purchase order. Okay, for application we use the name as a PO, and in the process point of view, for purchase order also short name is PO. Remember, PO means application. Okay, PO means what application means purchase order. PO means process point of view. What does it mean by PO means purchase order? Please make a note of that point. Here PO means Oracle Fusion Purchasing. CM means Oracle Fusion Cash Management. And the AP means Oracle Fusion Accounts Payable. FA means Oracle Fusion Fixed Assets. GL means Oracle Fusion General Ledger. And here INV means the same, Oracle Fusion Inventory. OM means Oracle Fusion Order Management. And AR means Oracle Fusion Accounts Receivable. And GL means Oracle Fusion General Ledger. And CM means Oracle Fusion Cash Management. Okay, remember all these points and try to give the presentation if it is possible. Make it as a possible. Give some presentation to somebody. Now, just if you think you don't know about this P2P and O2C before our session, now you got the information. What does it mean by P2P and O2C? The same you can give some presentation to somebody, so you will be more comfortable with this P2P and O2C. Okay, just go through this again and again. Read and remember what departments we have, how the data communication takes place, or normal communication takes place, for which department, which application we have. However, I presented to you, whatever I explained now, the same try to give the presentation to somebody. That's how you can start practicing. Okay, if something is related to system, we'll do in the system. So what we have to understand theoretically, once we go through that, better you try to give the presentation to somebody. You can plan to give some P2P presentation to somebody today and tomorrow to see. That's how you can plan. That's how you can start preparing. Okay. By understanding, if you think, okay, you are okay, when you go for interview and all, the confidence levels would be different. When you speak about that content, it would be flexible when you go for interview. I hope you remember that short names for the applications what we have in the P2P and O2C. Now let's look into those two cycles in one go. So here you can see this is a P2P cycle, this part. Okay, if any shortage, requisition need to be raised and approvals, then that approved requisition information will come to PO, purchasing application. They create RFQ, the quotation process. They get the quotations and the quotations need to be analyzed and we have to choose the best quotation. Against that best quotation, we raise the purchase order. We create purchase order with approvals we'll send to supplier and we receive the material from the supplier. For that we create GRN and if required we do the purchase returns. Okay, we record the purchase returns. And finally from PO, the GRN information will pass to AP, accounts payables. In accounts payables, we create purchase invoice and we process the payment. If the purchase invoice related to asset purchase, the AP, accounts payables, will share that asset purchase invoice information with FA, fixed assets. In fixed assets, what we do? We create fixed assets and we calculate the depreciation. Okay. And in accounts payables, whatever the payments data we have, that will share with the cash management CM. Okay, the payments data will share with the cash management for bank statement reconciliation. Finally, from all these applications, data will send to GL for reporting purpose, financial reports. And when I talk about O2C cycle, this is the O2C cycle. So we record the sales order. Whenever we get order from the customer, we record the sales order. We check with inventory whether stock is available or not. If stock is available, we book the sales order. Then inventory take the responsibility of picking and doing the ship confirmation. So whenever picking happens within the inventory level, order management, okay, department can record the same in their books as the quick release happened and the ship confirmation is done. If any returns from the customer, within the order management only, we record the sales returns. Based on the ship confirmation details, okay, here sales invoice can be created in the receivables, accounts receivable. Whenever we get the payment from customer, we record the receipt. This receipt information, receivables will share to cash management application. Okay, the accounts receivable application will share with the cash management application for bank statement reconciliation. Finally, from all these applications, data will go to GL for financial reports preparation. If you notice, these departments are involved in the both cycles, P2P and O2C. Inventory, cash management, GL, and other applications are not involved in the two cycles. The PO, AP, FA is just part of P2P and OM are just part of O2C. Right? So done. Now, here these applications we call as a financials applications. These applications which are marked in this yellow color, these applications we call as financial application. So these applications, okay, inventory, PO, OM, these applications we call as SEM applications. Okay, SEM means supply chain management application. Okay, supply chain management applications. sorry, supply chain management applications, SCM applications, supply chain management applications. Okay, now our focus would be on these applications. This is our course. Okay, this is our course. Okay, even if you learn this financials and SCM, generally you don't get an opportunity to work on these two areas, okay, as one consultant. So these are the two separate areas. One is financials, other one is SCM. When we are going to work on this financials application, you see here the process flow. If you are going to work on accounts payables, the purchasing application is tightly connected with this. When we are working on the accounts payable, when you create the purchase invoice, we should understand the basics of PO, GRN, or purchase returns, these details. For that reason, in our classes, I'll take you through this purchasing as well as inventory, whatever we have to understand. Okay. The same way, when we are going to work on the receivables application, so if sales invoice, if you are not able to create, the reason would be with a sales order. So you should understand the basics of sales orders also, how they create the sales orders. We never create, but just we should have some understanding, basic understanding that will help you so that our job will become easy. In the order management, how they create the sales orders, how they do the booking, quick release, ship confirmation. So we have to understand so that if anything wrong with our sales order, easily we can fix those issues. Sorry, sales invoice. If anything wrong with the sales invoice, so easily you can fix those issues so that our financial processes easily we can run. So that is the reason I'll take you through this SCM applications also basic level. That is not required. When you learn this financials, you work as a financials consultant, not as a SCM consultant. So even we are going to work as a financial consultant, if you have some basic knowledge on this SCM, that will help you. What level of knowledge we require when we are going to work on the financials, I'll cover that in our classes. Okay, and one more point. This is general ledger application. Okay, this is general ledger application. So from all the applications, we send the data to general ledger for financial reports. So apart from general ledger, all the applications we call as sub-ledger applications. Remember this term. Say for example, in each applications we have 10 records. Take simple example. 10, 10, 10. How many total we have? 7 applications we have apart from GL. Don't count GL. So 7 applications we have. From each application, 10 records we are going to send to GL. How many records you can see in GL? Total 70. If you compare GL with FA, fixed assets, in FA we have only 10. Here 70. In GL we have 70. In AP we will have a 10. Here 10. So compared to GL, these are the subparts only. 10, 10, 10. That is the reason these are all applications we call as sub-ledger applications. Okay, remember this term, sub-ledger applications. So these are the different applications. These are the financials applications. These are the SCM applications. The applications you can call as, these all are applications, right? We are discussing as applications. Okay, or application. If you select specific, that is application. So instead of calling as an application, you can call as a module also. Okay, module is the technical term. I can say GL application, or I can call it as GL module. I can say AP application, or else I can call as AP module. Remember, so application and module both are same. Okay, module is the technical term. Okay, technically we use the term as a module. When we are going to use this, ideally we call it as an application. Even if you call these as a modules, nothing wrong. Okay, this is the point we have to understand. This is all about P2P and O2C cycle. Please go through and get ready with this information. If somebody is going to ask you, could you please explain P2P cycle? You should be able to explain. Okay. Explain P2P cycle. P2P stands for Procure-to-pay cycle. In P2P cycle, so if there is any requirement from the customer, we check the stock availability within the inventory. If stock is not available, inventory department takes the responsibility of raising the purchase requisition and they get the approvals. Once purchase requisition is approved, inventory department will pass that information to purchasing department. The purchasing department will request for quotations, RFQ. They raise the quotations, they raise the request RFQ. So they get the quotation from the suppliers, they do the analysis, they do the quotation analysis, they choose the best quotation and they place the purchase order to the supplier with approvals. And if any, once our organization receives the material, we record the purchase GRN, goods receipt note. If any returns we want to do to the supplier, that we record as a purchase returns. Then purchasing department will pass GRN information to payables department. The payables department creates purchase invoice based on the GRN information and they make the payment as per the payment terms. The payables department can share purchase invoice information to asset department if the purchase invoice belongs to asset purchase, and asset department will create fixed assets based on that information and they can calculate the depreciation. And payables department can share asset information. Payables department can share payment information to cash management application or cash department, you can say. And based on that, they can do the bank statement reconciliation. Along with that, the cash department or cash management responsibility is maintaining the bank accounts. And finally, all the information we just transfer to general ledger application for financial reports. So this is how you have to explain P2P cycle. In the same way, what do you mean by O2C? O2C stands for order to cash cycle. So when we get orders from the customer, the orders can be recorded by sales department. That they record as a sales orders and they check that the stock is available or not with the inventory. If stock is available, they book the sales order. And whenever we move the material from the sub-inventory to staging, that we call as a pick release, that can be tracked by sales department. Whenever we ship the material from our organization to customer organization, that can be tracked as a ship confirmation in the sales department. And if any returns from the customer, that we can track as a sales returns as a part of sales department. And the sales department will pass that information to receivables department. Receivables department can create sales invoice against the ship confirmation details. Whenever they get the payment from customer, that they record as a receipt, and the receipt information receivables department will pass to cash management application, you can say, or cash department, anything you can use. They'll pass to cash department. Based on that, they do the bank statement reconciliation. Finally, all the data we send to general ledger application, so to prepare the financial report. This is what we call as O2C cycle. This is how you should be able to explain. Okay. So from this session, what we have to understand is just you have to understand what we discussed. This is how you should be able to explain. So plan accordingly. Not only this, everything what we are doing. Okay, if I ask the question, how to create the user in the Fusion applications, you should be able to explain. If I give the instance, if you are able to create, that is not enough. So when you go for interview and when you speak with somebody, you should be able to explain, because this is a functional course. Okay, so how to create a user, how to create this and that, you should be able to explain. Those all we'll come to know very soon, how to create and all those things. Whatever we discussed so far, okay, you should be able to explain. Okay, plan accordingly and spend some time, prepare, read this content, and remember, if possible, try to give the presentation. Okay, so that's all for today. Any questions, you may stay back or else you can drop from the meeting. Okay, we're done for today. If you have any questions, you can stay back, we'll discuss. If you don't have any questions, done for today. Any questions, please?
Lakshman, can you just explain the sub-ledger application? So what does exactly mean by that?
We discussed, right? From all the applications, we get the data here. Example 10. From each applications, we got 10 records. In GL, we have a 10 complete data. In say in here, we have how many? 10 only. Compared to this GL, 10 records, this sub only, right? 10 records only.
Right.
Sub part, not full. Full where we have GL, because all we collected the GL. That's the meaning of sub-ledger application, sub-ledger, sub-part. The actual GL, general ledger. This is the actual ledger, and those are sub only. Remaining all are sub-parts.
Okay.
Yeah. Any other questions, please? Okay, you should plan to spend time. That's very important. When we are doing this course, if you just attend the classes, no use at all. Okay, no use at all. If somebody is not okay with the basic communication skills, okay, don't do this course. Please don't do this course. It's wasting your time, money, and do conference levels. Fine. So, since no questions, so then we're done for today. We'll connect tomorrow same time. Thank you all. Have a good day and good night. See you tomorrow.